Hello and welcome to Money in Motion video blog. This is Dan Perkins, and boy has it been some kind of a week. 350 points down yesterday, the market approaching 7% decline. Everybody's a little nervous, and rightfully so. The world seems like it's coming to an end. China's falling apart. Europe is not making any progress towards its recession, and now there's talk that the Fed may not raise interest rates. As you know, I cautioned all of you some time ago when oil went down to the 42 level and then rallied back to over 53. I said that we would have to go down and test that low to see if it would hold before we could hit a bottom. And we came down slowly, and then we hit the target, and we went through the previous low. Now we're at a 9-year low. Have we seen the bottom? Probably not. We may go below 40 for some period of time, maybe as low as 37, 38. And that's going to scare a lot of people. It'll clearly put the Fed on the sidelines, because as the cost of energy continues to decline, they're now more worried about deflation than they are inflation. As the economy slows, we could see a rise in the unemployment rate as people get laid off. So how are our indicators doing? They're doing pretty well. Gold is about 1100, 1115. Not much change since the first of the year. The 10-year Treasury is down to about 206. That's not quite as low as it was previously, but it's way down from the 240 level. And oil is around $40 a barrel. So there's no indication that we have any inflation. There's also no indication that we're going to have a robust recovery, which is going to keep the Fed on hold probably, I think, until at least the 2016 election. I realize that that's way out of line with what everybody else is talking. But I believe that the economy, the world economy, is softening. Eventually it has to come to us and will soften. And we are going to see very slow growth, maybe even a couple of quarters of negative growth until we work our way out of this. It's going to be very telling, very volatile time. Dividends are extremely important. The shorts of the S&P 500 are actually working very well for us. We could have probably had more, but I didn't want to violate the 5% rule. We've seen some nice recovery. Anley has ticked up dramatically in this downturn, primarily because the new CEO has purchased about $3 million worth of the stock, and they've announced a $1 billion buyback, which is about 10% of the outstanding shares of stock. That's important because it says they think the best investment for their money is their company, because they're yielding 12%, and they can't find that anywhere else in the marketplace. So volatility is going to continue. I think we're getting close to a bottom. I wouldn't be surprised if we didn't see a rally after Labor Day, but the rest of August is going to be slow and grinding, and don't worry about things. Enjoy your family, enjoy the rest of the summer. The dividends are good, and the volatility is going to be with us. I've been warning about it, and it's going to continue at least through the end of the year and probably into next year. So enjoy the summer, because you're getting good dividends and you don't have to worry about anything. Don't pay attention to the gyrations of the market any given day, because we're not day traders, we're long-term investors. So if you have questions, as always, please feel free to give me a call or send me an email. This is Dan Perkins, and thanks for watching.